I spent the last 30 days doing something crazy. I locked myself in a room and analyzed over 1,000 financial charts, stocks, crypto, and Forex. I wiped my charts completely clean. No RSI, no MACD, no complicated indicators, just pure price action. Why? Because I wanted to find the exact setups that institutional traders use to trap retail money. And after hundreds of hours, I discovered a brutal truth. 90% of what books teach you about trend lines and candlestick patterns is actually wrong, and it's designed to make you lose money. In this video, I'm breaking down the 3 hidden rules I discovered after studying those 1,000 charts and exactly how you can use them to transform your trading today. Let's start with rule number 1, wicks versus real bodies. When I was going through the first 200 charts, I noticed a massive mistake most retail traders make. They draw trend lines randomly, sometimes cutting through the candle bodies, sometimes connecting the wicks. Here's the rule of consistency I found. Always start with the wicks. Wicks represent absolute price extremes and liquidity sweeps, where institutions reject the market. If you connect the wick of point 1, you must connect the wick of point 2. Never, and I mean never, cut candle bodies. A trend line is only breached if a candle body closes decisively past it. Look at this chart right here. Retail traders drew a line cutting through the bodies. Though it was a breakout and went short, what happened next? The price reversed instantly because the institutional liquidity was sitting at the tip of the wicks, not the bodies. Rule number 2 is something I call the angle of decay. After studying chart number 400 to 500, I started measuring the angles of successful trends versus failed trends. Look at this first chart. This is an aggressive bull trend with a slope way steeper than 45 degrees. Retail traders love this because of FOMO. They see a vertical line and keep buying. But my data showed that trend lines steeper than 45 degrees are highly unstable. They act like a rubber band. The harder they stretch, the more violently they snap. Now look at the second chart. This is a healthy, sustainable trend line. The slope is reasonable, around 30 to 45 degrees, and look at the reaction count. Price tests it 3, 4, 5 times and respects it. The gold mine is found here. Sustainable trends built on high reaction counts give you high probability setups. Steep trends just give you blown accounts. This brings us to the most discovery out of all 1,000 charts. The Trendline Liquidity Trap. The Trendline Liquidity Trap. Traditional textbooks tell you when a trend line has 3 or 4 touches, it's incredibly strong. But institutional algorithms see this differently. To them, a well-established trend line is a giant pool of money. Why? Because every time retail traders buy at this line, they place their stop losses right below it. One chart after, I saw the exact same pattern. Price approaches the trend line for the 4th or 5th time, breaks it aggressively to make everyone think a crash is happening, triggers all the stop losses, grabs that liquidity, and then boom, it prints a massive rejection, weak, and reverses. The big players don't trade with the trend line, they trade with the liquidity generated by it. So, how do we actually trade this based on this data? It's a simple 3-step execution. Step number 1, identify a clean, valid trend line with a sustainable angle Do not cut the candle bodies. Step number 2, do not buy or sell under regular touches. Instead, wait for the fake breakout. Step number 3, wait for a strong rejection candle to close back inside the trend line. Enter your trade right at the close of that candle. Place your stop loss just below the fake out wicks and target the previous swing high. By doing this, you are no longer the liquidity. You are trading with the institutions who just swept the market. Studying 1000 charts taught me that successful trading isn't about guessing where the price will go. It's about understanding market psychology and human behavior. Once you stop trading like the crowd, your results will change forever. If you want me to do a live trading video where I apply this exact liquidity trap strategy in real time, let me know in the comments below. Smash that like button, subscribe to the channel, and turn on notifications so you don't miss the next data-driven breakdown. Thank you for watching, and I'll see you in the next video.